Good morning and good evening, ladies and gentlemen. Thank you for standing by, and welcome to uCloudlink Group Inc. second quarter 2020 earnings conference call. At this time, all participants will be in listen-only mode. After prepared remarks by the management team, there will be a question-and-answer session. Today's conference call is being recorded. I'd now like to turn the call over to your host today, Mr. Bob Shen, Senior IR Manager of the company. Please go ahead.
Thanks everyone for joining us on our second quarter 2020 earnings call today. An earnings release is now available on our IR website at ir.ucloudlink.com, as well as via newswire services. Here, I give a brief introduction to our uCloudlink team. Ziping Peng is our co-founder and chairman of Board of Directors. Chaohui Chen is our co-founder, director, and chief executive officer. Zhigang Du is our director and chief operating officer. Yimen Shi is our chief financial officer. Zhu Tan is our chief strategy officer. Our CEO will begin with an introduction of our company overview and business highlights. This will cover Section 1 and Section 2 of the earnings presentation posted on our IR website. And then our CFO, Yimen Shi, will discuss our financial results in Section 3. Before we proceed, please note that this call may contain forward-looking statements made pursuant to the safe harbor provisions of the Private Securities Litigation Reform Act of 1995. These forward-looking statements are based on management's current expectations and observations that involve known and unknown risks, uncertainties, and other factors not under the company's control, which may cause actual results, performance, or achievements of the company to be materially different from the results, performance, or expectations implied by these forward-looking statements. All forward-looking statements are expressly qualified in their entirety by the cautionary statements, risk factors, and the details of the company's filing with the SEC. The company does not assume any obligation to revise or update any forward-looking statements as a result of new information, future events, changes in market conditions, or otherwise, except as required by law. Please also note that uCloudlink's earnings press release and this conference call include discussions of unaudited GAAP financial information as well as unaudited non-GAAP financial measures. uCloudlink's press release contains a reconciliation of the unaudited non-GAAP measures to the unaudited most directly comparable GAAP measures. I will now turn the call over to our co-founder and CEO, Mr. Chaohui Chen. Please go ahead.
Thank you, everyone. Let us turn to page 4 of the earnings presentation, which shows our vision and mission. We are the world's first leading mobile data traffic sharing marketplace with advanced cloud SIM technology, which enables consumers to enjoy mobile connections on any available network at any time. We also enable partners to be an over-the-top carrier worldwide, solving coverage, roaming, and utilization problems. Our innovative cloud SIM technology set the technological foundation of our marketplace. We are the pioneer of introducing the sharing economic business model into the telecommunication industry, creating a marketplace for mobile data traffic. Leveraging our innovative cloud SIM technology and architecture, we have an innovative solution that is already deployed at scale, enables the marketplace to be established without the mobile data bottleneck supply, and enable dynamic device data traffic navigation across multi-network connections. We redefine the mobile data connectivity experience, allowing users to gain access to mobile data traffic allowance shared by network operators on our marketplace. So far, we have aggregated mobile data traffic allowance from 220 mobile network operators, we call MNOs, in 144 countries and regions in our Cloud SIM architecture. Page 5 gives a high-level view of the data marketplace that we envision and which our technology enables. The left-hand side of the slide shows the source of data from the market. With our Cloud SIM technology, we can simply buy SIM cards from carrier or their partners around the world. We call that first-hand mobile data. Our system can also utilize the unused data from end user. We call this second-hand mobile data. The right-hand side of the slide shows the various users of data in the marketplace. This marketplace is valuable to both users and carriers, which enables an end user device to connect any available network at any time and anywhere. It also enables the carrier to easily share their network capacity, selling their traffic to worldwide users. They can then act as an over-the-top carrier worldwide to solve roaming coverage utilization problem and achieve better returning of investment. We have transformed the traditional telecommunication business model, and we can do repackaging, redistributing, and enable dynamic allocation, recycling, etc., to enable the end user to choose the optimized coverage, speed, and price with flexibility. Let us move to the page 6 and talk about 5G opportunities for us. As we know, 5G radio frequency band is higher, needs 4 to 5 times the number of base stations in order to get similar coverage as 4G. In the early stage, 5G coverage and the infrastructure are not sufficient to support roaming, and there are significant incremental CapEx requirements related to spectrum and network equipment and infrastructure. On 5G ready, Cloud SIM platform offers a ready-to-use solution for mobile network operators and smartphone manufacturers, and that enable roaming-free inter-carrier 5G network access domestically and internationally. As network operators start to roll out 5G networks, mobile data traffic sharing between mobile network operators via our Cloud SIM architecture can reduce capital spending and roaming agreement negotiation costs, ensuring low network latency for end user and expensive network coverage. We will continue focusing on our R&D investment on service and product development related to the 5G, as the advent of the 5G bring fast data connectivity speeds and more business opportunities. Our series of 5G products such as Mi-Fi, CPE, and the GMI, GlocalMe Inside, are expected to launch in the near term. We will continue to keep our leading position and capture 5G business opportunity globally. Page 7 shows the evolution of our Cloud SIM business model. At stage 1, we directly face end users it is B2C retail model. We have proven the technology and proven the business is successful and profitable. We capture all revenues, including those from hardware, service, data traffic, and we also bear all costs. It took 2 to 3 years, but we are now the largest portable Wi-Fi service provider for international roaming for Chinese outbound traveler in year 2018, according to Frost & Sullivan. Stage 2 is B2B2C wholesale model, where we can work with partners in different countries to use their brand while copy our business model. It is faster than expanding by ourselves and requires less spending. From stage 3, we call a PaaS and SaaS platform model. Our business partner can rely on our PaaS and SaaS platform for SIM and data traffic management and focus on sales and marketing. Such specialization enables us and our business partner to operate more efficient. In addition to 5G, we will continue investing our R&D efforts towards the further development and update of our PaaS and SaaS platform, which not only providing innovative and advanced platform service and the functions to our business partner, but also has been effective in servicing and facilitating customers and business partners globally and contributing to our high potential for growth. Our new and advanced PaaS and SaaS platform can optimize the utilization efficiency of SIM card pool and improve the algorithm for better network quality with the improvement for OTT management capabilities. As we migrate from stage 1 to stage 3, we are gradually become more platform-centric, allowing us to further expedite our global expansion by forming a global partner ecosystem. Let's turn to page 8 and take a look at the mechanism cloud SIM technology. There are 4 critical advantages of our innovative cloud SIM technology. Firstly, with our innovative cloud SIM technology, we can create a full marketplace, including the first hand and the second hand of the data traffic with a massive user base. Secondly, with Cloud SIM app, the device or handset can dynamically connect to the different networks by changing to a different SIM card in remote sites. Thirdly, it simplifies the relationship with the carrier. Just buy SIM card from the carriers and their channel, making supplyment easy. Fourthly, the physical SIM card has over 20 years history, and it is secure, reliable, and mature. Acquisition is much easier, and there is very low risk and the barrier for SIM card supplyment. With these advantages, our Cloud SIM technology facilitates a valuable service to both users and carriers, enabling not just connecting, but superior connection. Our Cloud SIM technology enables marketplace access to the superior connectivity globally and also bring us great business opportunities. As of June 30, year 2020, we had 54 patents approved and 65 patents pending for approval globally. During the second quarter of year 2020, we have 4 new patents approved and 2 new patents now pending approval. Please Page 9 shows our 3 growth strategy. uCloudlink 1.0. uCloudlink 1.0 is international data connectivity service, focuses on cross-border travelers and is keeping stable growth and high profitability, increasing its penetration and market share by launching more channels, more countries, more GMI, global mean inside, and providing better service quality than the other roaming technologies. uCloudlink 2.0 local data connectivity service focuses on local residents and solves challenges between carriers. It has started gaining faster growth to be a huge volume user number company. We are developing GMI, global mean inside, with handset vendor one by one, building local operations successfully with local partner, country by country, and catching local mobile broadband and IoT GMI global mean inside opportunities. uCloudlink 3.0 is a full marketplace of the data traffic. It's in trial and which is technologically ready. Let us turn to page 10. Recently, we appoint Mr. Xinquan Xu, Victor Xu, as our core chief sales officers. Mr. Xu possesses strong track record in managing the end-to-end product cycle, from development to strategic global marketing of consumer goods such as mobile phone products, in addition to his extensive and deep cross-industry background and experience such as the internet, telecommunications, mobile phone industries. He previously held senior executive roles in various renowned corporations, including Huawei Technology and JD.com. His appointment strategically elevates our sales, marketing, and consumer engagement initiatives to be better match the growing demand for our innovative high-tech service and product around the world. Our team become more stronger to capture the large global market opportunity. Let us turn to page 12 for our business highlight. The left-hand side of the slide shows daily active terminal, we call DAT, as of June 30, 2020. A certain portion of DAT and data usage per terminal are derived from our business partners. You can see from the middle of the slide showing the DAT breakdown by uCloudlink 1.0 and 2.0 data connectivity services. The decrease of total DAT during the second quarter year 2020 is mainly attributable to the decrease of our uCloudlink 1.0 services due to the COVID-19. We believe our uCloudlink 1.0 business will steadily recover and eventually exceed the performance before COVID-19 after international travel resumes. In addition, we believe the coming 5G and IoT are both a driver for uCloudlink 1.0 as well. On the other hand, our uCloudlink 2.0 local mobile data traffic is showing high demand, fast growth, and has been less impacted by microeconomic factors such as COVID-19. Our uCloudlink 2.0 service continued to increase during the second quarter year 2020 and account for around 74% of total DAT. Average daily data usage per terminal was 2.16 gigabit, in June 2020. From page 13, we can see we continue to diversify our business globally. Mainland China's revenue as a percentage of total revenue continue to decrease. As we diversify our global business, we continue to build our ecosystem with our business partners in various countries and regions. As of second quarter 2020, we have 92% of total revenue coming outside mainland China. During the second quarter 2020, Japan contribute to 56% of total revenue. We formed an alliance with one of the largest mobile network operators in Japan, and we continue to expand our business and alliance with our partners globally. We continue to invest in R&D to keep our leading position and core competitiveness. Looking ahead, we will dedicate to investing in R&D to keep our leading position and core competitiveness in the global connectivity service market and to enable the first global 5G connectivity platform. Additionally, we will continue to build our cloud SIM technology ecosystem with our business partners in various countries and regions such as Japan, Southeast Asia, United States, Europe, etc., aiming to further develop the world's first and leading mobile data traffic sharing marketplace. With that, I will now turn it over to our CFO, Yimeng Shi, who will go through the financial highlight section. Please.
Thank you, Mr. Chen. Hello, everyone. Let us turn to page 15. The impact of COVID-19 pandemic continued to rapidly evolve worldwide in the second quarter of 2020. Our total revenue decreased by 41.5% from $35.9 million in the 3 months ending June 30, 2019 to $21 million in the 3 months ending June 30, 2020. Revenue from service were $9.9 million, representing a decrease of 53.5% from $21.3 million for the same period of 2019. The decrease was mainly attributable to the decrease of our 1.0 international data connectivity service revenue, which was impacted by prolonged international travel restrictions due to COVID-19. Service-related revenues as a percentage of total revenue also decreased to 47% during the second quarter of 2020. On the other hand, our 2.0 local data connectivity service was not impacted by COVID-19, and its revenue increased by approximately 14 times from $0.2 million in the second quarter of 2019 to $3.1 million in the second quarter of 2020, which partially offset the impact on our 1.0 international data connectivity service. So far, we have started our 2.0 local data connectivity service such as in China, Japan, with a faster growth rate in Japanese market. And we will continue to expand to more countries and regions such as Asia, United States, Europe, etc., which have high growth potential. Revenue from parts and SaaS service were $0.5 million, representing a decrease of 72.2% from the $1.8 million in the same period last year. This decrease was primarily due to international travel ban due to COVID-19, but our 2.0 local data connectivity service demand was strong and not affected. Revenue from sales products were $11.1 million, decreasing for 24% from $14.6 million in the same period last year, which was primarily due to the decrease of our 1.0 international data connectivity service due to COVID-19. But the performance and demand for our 2.0 local data connectivity service was strong and was not affected by COVID-19. Our total revenue decreased by 10.1% from $60.6 million in the 6 months ending June 30, 2019 to $54.5 million in the 6 months ending June 30, 2020. Revenue from service decreased by 34.2% from $41.5 million in the 6 months ended June 30, 2019 to $27.3 million in the 6 months ended June 30, 2020. Revenue from sales products increased by 42.4% from $19.1 million in the 6 months ended June 30, 2019 to $27.2 million in the 6 months ending June 30, 2020. Page 16 shows the revenue breakdowns of our two business segments, namely revenue from service and sales products, which have synergy between each other. During the second quarter of 2020, revenue from service and sales products accounted for 47% and 53% of total revenue, respectively. The reduction of percentage service-related revenue was mainly because of the decrease of our 1.0 international data connectivity service revenue. Apart from this, our past SaaS service acquired a certain number of business partners and a certain portion of revenue from sales products was related to our past SaaS service. We focused on our service-related revenue, which is a key direction of our business development, and we believe that our service-related revenue will be the main contributor to our overall revenue with strong growth potential. Let us turn to page 17 for gross margins of our business. Our service gross margins and the overall gross margin decreased to 35% and 26% during the second quarter of 2020, compared to 51% and 35% during the first quarter of 2020, respectively. It was mainly because the decrease of 1.0 international data connectivity service revenue impacted our service gross margins, also on overall gross margin due to COVID-19. In addition, revenue from certain customers of our past SaaS service with higher gross margins over other segments also decreased to a certain extent. Apart from above, to mitigate the COVID-19 impact, we took a hard look at our costs during the pandemic. Our costs include some fixed costs and variable costs, and we were able to reduce variable costs to a certain extent. We will continue to work on measures to optimize our cost structures going forward. We believe that our cost gross margins and overall gross margins will be improving as our 1.0 international data connectivity service recovers. Page 18 shows the breakdowns of our operating expenses. Total operating expenses decreased 33% from $15.3 million during the second quarter of 2019 to $10.2 million during the second quarter 2020. We took cost control measures on our operating expenses to offset the top line impact from COVID-19. Total operating expenses as a percentage of total revenue is increased from 43% during the second quarter 2019 to 49% during the second quarter of 2020. This was mainly due to the decrease of overall revenue. In the second quarter of 2020, we continued to invest in R&D to keep our core competitiveness in the long run. You can see from right-hand side of the slide that our R&D expenses accounted for 24% of overall operating expenses during the second quarter of 2020. G&A expenses accounted for 41% of total operating expenses, with litigation fee included. Let us turn to page 19. Operating cash flow was negative $2.8 million during the second quarter of 2020, compared to positive $6.3 million during the second quarter of 2019. Our cash flow was normal with sufficient cash and cash equivalents as at June 30, 2020. Our capex was $0.2 million during the second quarter of 2020, compared to $0.4 million during the second quarter of 2019. Capex as a percentage of total revenue decreased from 1.1% during the second quarter of 2019 to 1.0% during the second quarter of 2020. It was mainly due to the decrease of uCloudlink 1.0 expenditure. Page 20. Net income during the second quarter of 2020 was negative $41.6 million compared to positive $0.3 million during the second quarter of 2019. Adjusted EBITDA was negative $3.1 million during the second quarter of 2020, compared to positive $1.2 million during the second quarter of 2019. Looking ahead, we will continue to invest in R&D as it pertains to innovative technologies and expand our ecosystem with more cooperation with business partners globally. 5G is coming and create more opportunity for both our local and international business. We will continue to build and expand our cloud SIM ecosystem and provide high-tech innovative products and cloud SIM technology service to our customer and business partner. With that, let me conclude today's presentations. Thank you, and we start our Q&A session.
And we will now begin the question and answer session. To ask a question, you may press star then one on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then two. For the benefit of all participants on today's call, if you wish to ask your question to management in Chinese, please immediately repeat your question in English. There will be a pause for the first question. And again, if you would like to ask a question, please press star then one. And our question today comes from Lisa Feng with Jefferies. Please go ahead.
Hi, this is Elisa. Thank you, management, for your presentation. My question is regarding the revenue mix, geographic revenue mix. I think mainland China's revenue mix has been dropping, and Japan and overseas has been increasing. So I was wondering, what do you project for the trend line for future geographic revenue mix for China? Will it continue to drop? And my second question is regarding U.S.-China relationship impacting our overseas business. So how do you assess this relationship impact to our business?
Yeah, this Iman and Shi. Let me answer your questions. And for geography distribution in second quarter, the China mainland contribute 8% of total revenues, and the Japan's markets contributes 56% of total revenues. This typically is for the second quarter's performance. Yeah, we believe the markets in China mainland is massive, and the percentage of revenue mainland China will be increased to some extent when the COVID-19 recover and the international travels has been the start. So that's we believe that there's 8% percentage revenue contribution from China mainland will not decreasing further to more extent and to in the futures. And yeah, there's typically percentage contribution from second quarter. Yeah. For this U.S. and China relationship, so far we revenue generated from the U.S. markets was growing in the second quarters, and we believe there's the demand from the U.S. market for either international travel and all for local mobile broadband service is growing and high potentials in the futures.
Hi, this is Bob Shen. Let me add some points to your question. First, your question is regarding our percentage for the diversified our business. I would say that it is good. It's a good trend that we saw our business gradually increasing globally, which is in line with our expectations. Let me show you an example. Let's see, a couple of years ago, for example, in 2017, the revenue coming from mainland China is over 60%, and for the Japanese market, it's only around 12%. Now the situation gets changed. The mainland China's revenue is 8%, and the Japanese over China became the single largest market globally. I will say that this is in line our business strategy because we are a global company and our business is internationally diversified, which is good to our business. And secondly, regarding the U.S. and China relation, although we cannot forecast the U.S. and China relationship going forward in next couple of years, but internally we first, as we mentioned, we are a global company with our business very diversified internationally. So apart from U.S., we also investing or also expand to Asia, Europe, etc. to diversify our business. So we hope that U.S. and China relationship becomes better and gradually recovered. But we also focus our business apart from U.S. So as I just mentioned, our business is globally diversified. So that will be our business strategy, and that will minimize the risk from U.S. section. So I hope we answered your questions.
Yes, thank you very well. You've answered it very well. If I may add another question, can I have some maybe guidance on the gross margin for the next few quarters?
We will disclose that when we have this a more clear explanations of the business in the coming quarters. And so far we disclosed the top line guidance, and in the third quarter the top line revenue guidance will be $21 million to $22 million.
Sorry, you mean can you say your question again? You mean the gross margin, right? Gross margin for the next couple. Okay. Yeah, I think right now our margin for second quarter 2020 gross margin is around 35%, but this is lower than actually because we are impacted by COVID-19, as our CFO just mentioned, we believe that the gross margin will continue to increase in next couple of months because first, we hope that our 1.0 international data connectivity service will recover, and secondly, I think our PaaS and the SaaS section will recover as well if the international travel ban or any good news from the vaccine of the COVID-19 it comes out. So we expect that when we believe that our gross margin and our service gross margin will continue to increase in next couple of months. Yeah.
Great, got it. Thank you, management team, for answering my questions.
Thank you.
And once again, if you would like to ask a question, please press star then 1. Again, that is star then 1 to ask a question. And as there are no further questions, I'd like to turn the call back over to management for closing remarks. And I would like to turn the call back over to management for closing remarks.
Bob? Yeah, thank you once again for joining us today. If you have further questions, please feel free contact uCloudlink Investor Relations through the contact information provided on our website or the TPG Investor Relationship.
This concludes the earnings conference call. You may disconnect your lines at this time. Thank you and have a good day.